From Lightspeed Partner to MENA Fintech, why Julie left a global VC to build in the Gulf, and lessons learned from working with hundreds of founders over the years. Welcome to Breaking Down Barriers, the podcast where we sit down with the people building and scaling and redefining the companies shaping our future. Today we welcome Julie Kainz, who's leading Corp Dev and Strategy at Lean Technologies. I'll just do a wider intro for you, Julie, and then we'll get straight into it. So you spent 10 years as a VC in London before recently moving to Dubai and switching to an operator role. Last role in VC was a partner at Lightspeed, a global multi-stage fund with over 30 billion in AUM. You focused on early stage enterprise deals in Europe, SaaS, and then what then became AI apps and ventures in the world. You joined the fund as one of the first investors in Europe. You worked with and invested in a range of companies like Granola, AI note-taking, PlanA, which was carbon accounting, Hook, AI for CS teams, CuspAI, which is a frontier AI company for material science, and Pyne, which is an agentic user onboarding. All super exciting companies. Before that, you're an investor at Dawn Capital, B2B focused European VC fund, and Salesforce Ventures. And for Salesforce Ventures, you were part of the first hires for the venture teams in Europe, and same for Lightspeed, second hire on the ground. Now you're leading corporate development, which includes M&A, fundraising, equity story, investor relations, but also jumping on other strategic projects that don't fit a JD yet. That's an exciting intro.
You make it sound way more exciting than I could, so thank you.
No, definitely not. And thank you for joining today. So the obvious first question is going to be around the switch from an investor to an operator, the why, and how was that experience for you?
Yeah, it's definitely a big decision, or it was a big decision to make. Not a very obvious one. I spent 10 years building a career in VC. My last role was really at one of the top funds in the world. I had spent like 4 years there. You build a portfolio, but it's also the point in the career for a VC. For context, I was a junior partner, meaning I was writing my own checks. I was on boards. Is that point where you have to decide, are you going to be 200% in to that career because it's still a very long road ahead, or decisively say no? And the reason for that is, again, it's such a long road ahead for a VC. It's a very long career with long feedback cycles. Usually companies exit after 10 years. Now they stay privately even longer. So the feedback loop is very, very long, and you really have to be investing for the next 20 years, basically. At the same time, the longer you stay, the harder it gets to leave. And so this felt sort of the midpoint for me, and to ask myself that honest question. And when I asked myself that question, I had to say, no, I'm not fully the 300% in. And I'm not sure if I want to do this for the next 20 years. And so, I started basically exploring other options. What could I do? And I always had that little ache inside of me, trying to be an operator. I wanted to go back to that, basically. And so that took me basically on the road to explore it. And I'm super happy I did. It was a very rewarding journey so far, and a big learning curve. And for me, the right step, basically.
And how many times did you go back and forth in your head that, I've made it to a partner at Lightspeed, one of the biggest, well-recognized VC funds globally, and then the operator role? Was there a certain shift? Like what was the mindset? Because the reason I ask is I can relate to this in some aspect, as you know, from speaking before. Building my own company for 5 years and leaving your own company was a really hard decision. It took me 12 months. Yeah. I feel like I needed a lot of external validation, which is where it maybe went wrong. But what was the sort of the mindset? Because it's hard to make that switch.
Yeah, I think you're right. It took me also like at least a year to really, really figure this out. I think two things. A couple of peers around me actually made the same decision, and talking it through helps. Talking through what resonated with them, why they make that switch. And I think a lot of folks in my sort of age and VC and same career stage had the same consideration. So again, as you said, like just talking to peers. But then what helped me a lot was actually honestly, one of the most senior partners I work with at Lightspeed, he truly was also a mentor, a great person to work with. He was leading our team. And I was able to have a really, really honest conversation with him about it. He had been a founder before. He then became a VC. He did the opposite, basically. He's seen both sides. And having that freedom to go to him without being worried that it's going to negatively impact my future in the firm if I decide to stay was super, super helpful. And so he really, really helped me accelerate that thinking journey, to be honest. And yeah, so it took 12 months, but once the decision was made, I made that jump. I think what also happened a little bit at the same time, to be honest with you, and accelerated that, is that the VC landscape has changed a lot. The job has changed a lot. AI has changed the entire industry a lot. And so there was also a little bit of a momentum piece that came into play. I think it's never been a more exciting time to build. And I felt even more that I was sitting on the sidelines, watching as companies were building really, really fast, building AI native, doing really exciting things. And I just wanted to get my hands dirty again, basically. And these kind of moments just came together. The point in my career, having the right mentor, and then also the shift in the ecosystem.
And is that change, is that also, and you mentioned it's changed a lot in the VC ecosystem, is that how you invest, how you assess founders, the end-to-end cycle? What would you say is like the significant changes there?
Yeah, so I think just from a VC-only perspective on the ecosystem, I think what changed is there's a higher concentration now, both in terms of capital flowing into companies and then also in terms of the deployment actually, or the funds that get access to those deals. I was lucky. I was at one of those funds that are really multi-stage, like huge capital pockets, great access to deals, amazing reputation. So I was part of one of those platform funds. However, I would also say that's a very specific job to run. At that point, you become very much a strategic capital allocator mostly. The job is getting in front of the most exciting and hyped rounds possible. It is less so about finding a very hidden founder that, you would think that you have more freedom to do that because of the risk that you can take in a big fund, but in fact, it's really about concentrating dollars and one or two companies that matter. And so I was also missing a little bit that original trait of like finding hidden talent, finding a hidden gem. That didn't really that's not how you build a career early in a big fund, to be honest with you.
Yeah.
And then the opposite of the spectrum is the solo GPs. And you've seen, especially in Europe as well as in the US, a lot of more ex-VCs of big funds go and build their own funds, or also founders, and really run as solo GPs. It gives you more freedom to back those like very eccentric hidden founders. It gives you more freedom to run the thesis that you want to run. I just wasn't ready to do that, to start my own fund yet. So with that bifurcation of the industry, that you're part of a really big fund, which wasn't really what I wanted to do, or you're running your own fund, that's kind of where the two spectrums that you can sit on, ends of the spectrum. And so yeah, that just changed the job as well for me a little bit. It changed what means to be successful, changes the day to day, and just didn't really fit me as much anymore.
And what would you say surprised you most about the shift? What's maybe harder than you expected? What turned out to be easier in this process? What the big difference is, and what's the recommendation there?
Yeah, switching to an operator role was definitely a big learning curve for me. It's a humbling experience, but also one of the most rewarding ones, as I said. You're going back to school, basically. I think what was most surprising is, as a VC, you often have the tendency to observe a company a little bit from the outside. You can take a step back, and you very quickly, through pattern recognition, can identify one or two levers that would help a business to make it to the next stage, or like a big strategic decision that could help the business either accelerate or be leaner or just be better in its market. Now, translating that strategy or theory or that observation into actually day-to-day processes and, really operating on it is way harder. You have 47,000 dependencies that run across the business, right? Everything is interlinked. So really putting that gap between strategy and practice has been quite surprising to me. And I think sometimes it seems so obvious what you should do, and then how you put that into a day-to-day is that translation is just harder. So I have more empathy now for actually, I think, CEOs and founders who sometimes realize what the problem is, but then it takes a while to really shift that business into that direction. I think what's also been like something that I've expected actually, but has been quite a learning journey, is the nature of the job or the day-to-day and how I operate had to change a lot, because as a VC, you're fundamentally a single operator. You're a lonely wolf in a way. All of your day-to-day is very much focused on your own work. You do your own deals, you build your own pipeline, you sit on your own boards, you write your own checks. You have a partnership that can like feedback on deals and give you some input, but generally speaking, you make decisions and you operate by yourself. Now, especially in a role that is as cross-functional as mine, it's very different, right? Suddenly you operate in a team, you constantly have to sync with multiple stakeholders across the business. It's a very different mindset of like picking a problem and then executing it through. You really need to bring a lot of people into the equation. And again, I think that's been really exciting. One of the things I enjoy most right now, because it's also finally have a thought partner across different businesses or different parts of the business. You finally have other folks to lean on that can help you figure something out that might be harder to do alone. But it also means sometimes being a little bit slower, for instance, because you don't just pick something up and you just go at it. And so, yeah, it's, again, been one of the most rewarding things, but also one big learning curve there too.
Yeah, no, I can resonate with that, going from sort of founder mode, making decisions end to end. Even with a co-founder, you're essentially making all the decisions,
Yeah.
and that learning curve's harder because you have to seek for that externally versus internally. And then obviously working with people, yeah, you have to bring them on that journey with you, but it's also good to get different thoughts, different perspectives that you maybe wouldn't have actually been thinking about yourself. So
Exactly. And I think also being a VC, as I said, can be a lonely wolf job sometimes. It feels lonely. It felt lonely to me. You're constantly just talking to yourself. Obviously, you're very social. You're constantly meeting people. You're at events. But the big decisions, you just make them by yourself, similar to a CEO, actually. And so it's been also nice, really, really nice from that perspective, having a bit more of a team.
And if I flip that as well, on the positive side, if someone is looking to make the opposite move, and I see a lot of that in product and tech leaders that are now looking to go into the VC world, so from an operator to a VC, do you have any advice for them?
Ask yourself why you want to do it. It's I feel like VC gets always a bit glamorized. There's exciting things about the job. You meet so many interesting people. You get paid to learn. Endless curiosity is a good trait to have. But fundamentally, I think a lot of people who come from sort of a builder experience, or they're used to rapid feedback cycles, shipping things, doing stuff quickly, like seeing results, measuring results, I think there's a chance those people might get bored. Because again, the job of a VC, especially if you get more senior, is you have so many meetings every day, you meet interesting people, but then the action resulting from that is very, very narrow. You do 1 or 2 deals a year. You might run it more, but like really end to end, 1 to 2 if you work at a really, really good fund, because the bar is very, very high. And then those investments also, for them to actually like bring results or show results, it takes a long time. So like that's a very different working mindset. And I think that a lot of operators that like the fast pace might get frustrated by that, actually.
Yeah, no, amazing advice. If I look at your new role then, corporate development, first of all, what does that even mean?
Corporate development, usually in a very, very narrow traditional sense, means M&A in most businesses. In my case, it includes also fundraising, equity story. Equity story means usually the story that you tell about a business, most narrowly to investors, but it can also be more generally holistic. How does everything fit together? Your go-to-market, your product, your financing strategy, etc. So thinking about your growth strategy ahead, basically. it also means now, in the case of Lean, I'm, as I said, jumping on a few projects that are more, they don't really sit at any department specifically. They're very cross-functional. They touch a lot of, there's like one pain point. There's no one person that can solve it right now. So yeah, from that perspective, it has also an element of this in my case, but very narrowly defined. It's usually M&A and fundraising.
And on that then, because obviously you've gone into this role, what would you say are the you kind of touched on it earlier, but the VC skills now that you've taken and you've adopted and you've applied into this new role, like when moving into an operator, like what would you say the key transferable skills?
Look, I think as a VC, you're taught to be the optimal generalist with very little exceptions, but generally speaking, we're really good at doing a bit of everything. We understand quite a bit about hiring. We understand quite a bit about general business strategy. We understand a bit about go-to-market, fundraising, finance. We're like a jack of all trades. And so I think it helped me really do that last bit really, really well. So be almost like a mini founder within a business on like smaller but high impact projects, because it's quite easy for me to pick something up, use that sort of base knowledge across departments that I have to spin something up, and then hopefully bringing people who are much more in the weeds in a certain function, right? So that helped a lot. I think generally also being the pattern recognition that I mentioned earlier, VCs get optimally trained in that. I can draw experience from hundreds of businesses that I worked with and spot something easier without getting bogged down in the details of every single department or function. And that can be valuable to a CEO, actually. Someone that helps them take that step back and say, like, okay, what is the one thing we need to do right now to move the needle versus we could do this thing in marketing, we could do this thing in sales, this thing on the product side. There's usually like one bigger sort of pattern that you can spot. And I can help you that. And then I think the last thing is sort of, as a VC, it's really about being quite networky, highly communicative. I always used to say my superpower personally as a VC was founder love, meaning winning the trust and the love of a founder and thereby winning a deal. And that helps me usually right now. I find it quite easy to put myself in the shoes of different people across the organization, which again helps with all the cross-functional stuff I do. So yeah, being a little bit of a glue between different folks.
Yeah, and I think the one that you mentioned there, pattern recognition is key as well. If I look at it from the other side of potential other roles, of a route of a career where a VC could go if they're looking to transition out and move into an operator, what roles do you think fit that background? Because interesting, actually met with a CPO, just joined a business, just raised Series C, fintech, really exciting. He hired a new product director who was ex-VC, kind of similar-ish background to yourself. And his one word, I said, that's like a unique hire because you've been very specific in what you're looking for. He said, but she's just an absolute sniper across the whole business and stuff like that. So you're kind of seeing that as a potential fit as well.
Yeah. I think like the most like obvious or typical route that VCs take is chief of staff because of everything that I just said, right? You work really closely with the CEO, usually or the exec team. You kind of like sit across functions. You do a lot of pattern recognition as a chief of staff. You do a lot of general business analysis and then putting processes and structure into place. VCs usually think in a very structured way. So we're good at like identifying a way to make something leaner or more efficient or just putting a bit of like structure around it. So that tends to be the very typical role. I think also VCs are usually not, there's people that would heavily disagree with that. I think if you pick someone a bit more early in their career, they will usually be also happy to pick up different things. Yeah. So we don't get, I think as a VC, you train to not feel too married to a certain role or title or job spec or whatever it is. We're usually a bit more like, as I said, jack of all trades. We're happy to like pick up a product or a project there that is a bit smaller than our role, but then also like flex up into something very strategic. And that can be an asset. Yep. I think corporate dev is also a classic one. Like it goes a bit more back to the point around building a pipeline of companies, being quite networked, having the ability to connect really well with the founder, meaning that if you want to acquire a business, that's helpful, having sort of someone in the team that speaks the language of the founder outside, and then also obviously the financial skill set of building a model around an acquisition that helps fundraising, very natural fit, usually fits either in chief of staff or corp dev as well, equity story building and so on. And then I think product is actually an interesting one. I think that can work if I've seen it work where the teams run more like mini businesses within a business. So the product person is almost like a mini CEO and has quite a lot of, you're basically like a startup within a startup.
Yeah.
And then again, it helps if you've seen companies go from zero to something and what needs to go right to apply that basically.
Yeah. No, amazing insights. I think it's always good for people to hear from the other side of, because it's a big shift and where can their career go, and it's always good to hear that firsthand.
I think one thing that I would say if you make that shift, that was really, really important for me is like, don't over optimize on the road though. I did not go into any of I didn't even apply for any job, full stop, because I wasn't sure yet what I wanted to do. I just knew these are my skills. This is all the things that I could do for a CEO. So I went basically initially when I made that decision, I met a ton of CEOs basically just on one-on-ones, not even with the perspective of, I want to work for you. I just went and said like, hey, I'm thinking about a step. Like, have you seen that? Give me some feedback.
Interesting.
What are things that you have that are not fulfilled in anyone right now on your team? What are some of the gaps? But also to see some of the business that I'm excited about. Is there a fit with the CEO? Could I see myself working for this person? And then super naturally from there, a few conversations basically emerged with a few CEOs. Again, none of them had a job role open. They were really like, oof, this is something that I've been struggling with. And then I ended up writing my own job description basically. It was like perfect timing, great click with Hisham, who's the CEO of Lean. And so I highly recommend optimizing for that learning curve and the founder fit and sort of opportunity to run with stuff in a team organization versus looking for a specific job role.
You're going to get everybody now just writing their own wish list of a job spec and sending it to CEOs and asking them if they want to join. And look, if we move to sort of the ecosystem perspective, you've gone from London to San Francisco to MENA.
Yeah.
How do you compare the three ecosystems today?
I mean, I didn't live in SF, but I worked for US Fund, so twice actually. So I had and I went there a lot for trips and a lot of exposure and so on. I think, especially with what's been happening in AI, I think the Valley just has jumped another bit ahead in front of everyone. Just the talent density, the capital density, the speed is just unmatched, to be honest with you. And it's actually really exciting, right? I think you can observe and learn, and it's great. At the same time, I think Europe, for instance, also just made a lot of progress on the AI race. Like there's a few exciting companies like 11 Labs, Lovable, for instance, that really jumped to the front of the queue. However, what I always found a bit frustrating about Europe, or not frustrating, is, I've been very early in the ecosystem 10 years ago. I think MENA is at a similar stage as some of the earlier years. In Europe, we always drove this narrative of how can we become the next Silicon Valley? And I always felt that was like a bit of an inferior complex instead of focusing on like what makes Europe unique, what makes our talent unique, what are the things that we can actually invest in, like where we have maybe a head start, the universities that we can invest in and so on, versus trying to copy another ecosystem that is very unique in its own trajectory. We actually did the same with Israel often in Europe, like comparing ourselves to Israel and then to the Valley. And I think MENA can actually skip that entire step. Really focus on like what do we have that other markets don't have? What are the industries? What are the talent pools that we have? And really invest in them and drive them forward. So yeah, in terms of how they compare, I think MENA is on a really exciting path actually. I think what I love about like culturally here, it's a very diverse talent pool in terms of backgrounds and where people come from. People come from everywhere. And so that makes for a unique setup. I think also people's mindset is very different. No one comes here to relax. People come here to build. People come here to work. People don't complain about that. People like to work hard. And, it's a cliche about Europe that Europe is a bit more like relaxed. But I do think that actually, if you look at it, like Europeans like to complain constantly about everything that's externally wrong and making it harder for them. I haven't heard this here, right? Because the mindset is more, I come here to build for myself. I don't expect any help. I just go and get it done. And I think that's very, very cool, actually. And I think if we keep investing in, the government is very, very invested. They really put the right regulation, try to put the right regulation into place, the right sort of make it very easy for talent to come with the right visa structure. You have the different sandboxes of the government, etc., etc. So there's a real push from the government trying to help the ecosystem forward. I think that's exciting. And so if we keep investing into the right pockets, this could be a great story.
Which one would you pick out of that then, in sense, from a MENA ecosystem? Is it capital, talent, regulation, exit, or is it just a combination of all of them?
I think it's always a combination, to be honest. You could say talent is the most important, but talent won't come if there is no capital.
Yeah.
If the regulation is not there, you can't really build a business. I think one thing that is often overlooked as a factor is universities, actually. If you look at the Silicon Valley, you have Stanford there, definitely a factory of great founders and exciting talent coming through. You had the same happening actually in Germany, and that brings me to this point, and also in the UK. You have obviously Oxford, Cambridge, great universities, especially now with AI and deep research and more frontier tech, really exciting hubs. In Germany, there's a university, a technical university. They have a program called CDTM, which is kind of hailed as the European Stanford. If you look a lot of the very successful European businesses, like the Pesonius of the world, for instance, the founders came through this program, right? It's a very dedicated program for entrepreneurship. So taking students out of the technical university and putting them into a 1 or 2 year program that just focuses on them starting a business with the right mentorship, access to capital, etc. And that really make a huge difference in Germany in terms of the startup ecosystem. So I think that's often a thing that I think we could still do here. That could be really, really exciting because you have such a great talent pool coming already. So why not invest earlier into that next generation?
Yeah, I mean, that's an amazing concept, and to see the success as well. And if we talk about fundraising, scaling, all of what, you obviously have a lot of experience and lessons of working with hundreds of founders. What advice would you have then for MENA founders that are looking to raise internationally? Because it's happening more, but hasn't happened enough yet.
Yeah, I think the most important thing if you raise from an international investor or global investor is understanding the ambition they want to see and understanding the storytelling that you have to do, to be honest. For me, fundraising is always more about the story that you can tell than the actual, I don't want to say not the reality, because obviously there needs to be a backing in it in a way. But I think sometimes founders get bogged down a little bit into, I need to have 1 million in revenue to raise a Series A, or it's now 2 million or whatever. Or I need to show 3 customers to raise this round from this investor. These investors don't really care about that usually. They care about the opportunity size. They care about your ambition. They care about your dedication, really finding some unique angle of why you can build something transformational, something that changes how the world runs, basically. And that's how you ask investor things. So if your ambition is to raise from an investor, you need to start speaking that language. And I also think it's a misconception that you can only raise international capital if you build something global. I do think founders that build here and build for the region can also raise from top funds. Lean has raised from General Catalyst, big US fund, one of the best in the world. There's actually a very exciting Saudi business, super early, raised from Founders Fund. Both of them built specifically for problems in the region that are so core and fundamental to their markets. And that's very, very exciting. And so you just need to find that this very special mission that you're on. I think that matters way more.
Yeah, I agree. The storytelling is key, even in my world of, we were speaking of it, but dating back to, I always used to build out the founding teams for early stage businesses across Europe, and it was that storytelling piece, because I need to attract. They all want the best talent.
Yeah.
Now, if I can't go out to market and I don't really understand what the real mission is and where you're going, how do I then get other people on board with that? And a lot of founders can get that wrong. But when I come out of a meeting and I'm super excited by this company myself, and I'm going to go out to market with that strategy, I'm going to be able to attract the right people. But even more so now, I'm just seeing the more conversations of the communities that I run here is just everybody's building, which is great and exciting. But then I'm just like, obviously there's the big terminology around the AI slop. I'm not saying it's, but I'm saying it's like, I don't fully understand what you're building and why you're building and what the purpose is really.
Yeah.
So that's harder to now identify is what I would say.
Yeah. And I also think it's, if I think about what excites me in a founder, or if I put my investor hat back on a little bit, I think the outlier founders are the ones that are truly intrinsically motivated by what they're building.
Yeah.
So the reason they're building is not purely money, for instance, usually. It is either they've seen a problem, they're so frustrated by the problem themselves in their previous day-to-day, they're like, I really want to, change that, solve that, need to do it. Or there's sort of a higher motivation to build a legacy in a space and really change an industry from scratch. That deep curiosity is usually a motivation, drives you way further. Because building a business, especially like scaling it through to IPO and beyond, such a hard journey. It's really just way easier ways to make money. And so if money is your incentive to start a business, it's just not the right one, because you won't have the stamina to see it through, I believe, through the hard parts. And so, and then also secondly, if money is the motivation and you're usually then also more worried to lose money, you're not going to take the risk that is necessary. To build a generational business, something that is really truly an outlier business, you have to take big risk. You have to be contrarian a little bit. You have to be not afraid to some points risk everything basically just to make a leap jump.
Yeah.
And so that's only possible if, I truly believe, if money is not the reason you're in it. Obviously, your business needs to make money. I'm not saying you don't need to be business savvy. You have to be. But it's more like, what's the core motivation why you're going at it?
Yeah, I agree. And what observation do you have then when you've been looking at the MENA sort of funding rounds versus London or San Francisco?
Yeah, I mean, it's more an outside-in observation, obviously, because I'm not an investor here. Like, I'm not working for a VC. I do look at some angel opportunities, but that's about it. But what I would say, sort of from rounds that I've seen, in the news and from founders that I spoke to and so on, and also looking at those cap tables of some founders I advise right now, I feel like one thing that I've noticed is that the cap tables are very busy. It's quite funny, actually. I feel there tends to be, even if the round is very early stage, a seed round or early Series A round, sometimes I see 5 really top good funds from the region all investing at the same time. So yeah, that's something that I would probably advise founders to stay away from. Just because for me, on a cap table or a funding round, quality over quantity. And I'm not saying that it's surprising to see actually a lot of those cap tables have a lot of high quality folks investing at the same time. But if there's not a single fund that has enough skin in the game, that's going to bite you down the line, especially if things get hard.
Interesting, because that's a great observation, and that happens with a lot of the businesses here.
It's very counterintuitive, because you would think, this is a great partner, this is a great strategic investor, they all will help me, this is a great angel. The more people I can surround myself with that are helpful, the better. And I get that logic, but really what happens, this is true when things go well.
Yeah.
If things don't go well, which happens at some point in the journey, if no one has enough ownership in the business, I believe no one has enough incentive to actually roll up the sleeves and help you out of that moment in time. And then also that completely a separate small point, but at some point managing a cap table that is extremely busy becomes a lot of work. Like, you have to do all the reporting. You have to be mindful of all of their pro ratas in the next round and so on. So it's just a lot of like management overhead as well, on top of not having one on the driving seat basically. And so I would advise founders to really try to, especially in the early rounds, focus on one, maximum 2 leads, and then add a few like really high quality angels in that basically give you advice either because they're relevant to your space or they have a great network. They kind of substitute some of those additional VC funds basically, but they take a smaller stake in the business.
So what would you say does it take then to raise a top round today, and how has AI shifted that game as well?
A lot, actually. I think the fundamentals stay the same, and it goes back to the point that I made, having something truly important to solve or truly impactful to work on, that hasn't changed. Like, the ambition hasn't changed. What changed a little bit is the benchmarks, for sure. You see companies now going from 1 to 10 million in their first year of operation. So I would say, however, that that's not normal for every single business in every sector. So I would also advise founders not to completely panic over that, right? Like, it just depends what you're building. If you're building a deep infrastructure business, your revenue curve will look very different. But yeah, definitely, I think being AI native is table stakes today, and being AI native can mean different things. It can mean that you build an AI product, like an 11 Labs again, or Lovable, or those type of businesses. It can mean that you pick an old industry, a services industry, a service business, and make it AI first. A lot of VCs excited about that today. Take a law firm or whatever it might be and build it from scratch in a completely new way. It can also mean building an AI app, actually, something that uses AI and the full tech stack basically, and then finds a very smart distribution way, go-to-market playbook, and it just scales really, really, really fast. That can be interesting as well. I just think that building a business from scratch today means you need to build a business this way. You cannot just, you have to be AI native in some way or another.
Yeah.
People will be expecting that. And then, as I said, the rest is the same basically. Just the traction has changed also significantly, what good means.
Yeah. Always. What good looks like is always continuously raising the bar, right?
Yeah,
so
that's right.
You mentioned earlier, obviously, the cap table piece, but what are the other fundraising mistakes that you see founders make on a regular basis? And then with that, then what are the biggest lessons around actual scaling that you've observed as well?
Yeah. On the fundraising side, I think the point that I mentioned earlier around storytelling is really the most important one. And I see sometimes founders get frustrated with it. They see another founder raising a huge round with way less traction than they have, and they're like, why? I don't understand. We're ahead. Our customers are paying more. Storytelling. Like, a good storyteller will raise more money than someone that has the same business, maybe even with more traction, but just can't really convey that the true vision of the business and where it should go. So it's a bit of a, again, counterintuitive point, but I think bogging yourself down into, I need to reach this certain metric to raise this round, or I see this with TAM calculations a lot. In the early stages, no investor expects a TAM calculation that is correct to the last decimal. It's actually a bad sign, because it feels like you need to prove that there isn't enough market. The really exciting businesses, it's crystal clear that there is a big market. There's nothing to prove about that point. And also savvy investors will understand that often the exciting markets still get formed. It's hard to size them today because they're so nascent and they're so early. What you really want to emphasize is momentum. Less so the reality today, right? You're raising on momentum, either momentum in the market, like there's a trend happening, there's a new thing happening, we want to be the first ones, or capture it now, that's momentum. We have so many users signing up all the time. We can't keep up with it. They actually want to pay us, but we don't have a paywall yet. So you don't really show revenue numbers, but you show momentum. It's more important than actually saying, I have one customer, it took me 7 months to sign him up, but we have him now. like you want to really like, that's when you want to fundraise and that's what you want to build your story around. Momentum can also mean talent density. I'm one co-founder, I found this other one, then we have this other team member that just joined, top quality. The three of us, we identified something, we're going really, really fast and iterating. That's momentum. So really like focus on that and the timing of your fundraise versus sort of waiting for that perfect metric.
Yeah,
that will give you the credibility.
Yeah, I mean, definitely, not just because I'm in it, but the talent and hiring momentum is a key one. Because I think naturally as humans, we always go and look at the company, look who's there, who's working there, and it tells the story. It tells a bit of that narrative for sure, is what I would say.
Yeah.
Featured story then, super exciting company you invested in, Granola. Are you able to talk us through that whole, that journey?
I think it's a good one, as we just talked about, how fundraising can go, right? Because when I was at Lightspeed, it was me and another partner actually worked on that deal together, and we led the pre-seed round. So pre-seed means usually before, that's the first money in, often before anything is there, no product build even, maybe a pitch deck, an idea, a team. You're taking a really, really early bet. And it was a non-obvious one, I would say, in this case, because note-taking had been kind of there. There was a wave of note-taking tools a little bit earlier before the AI wave. So Notion, for instance, had its big story, right? And so the question was really, does the world need another note-taking app or another note-taker? Cannot Notion just build this? Is it really something revolutionary to like record your notes and just turn them into something automated? And so you could have been very skeptical, just like over-analyzing the space or over-analyzing that narrative. I would also say like, and there was nothing yet. There was an idea, pitch deck, there was no product build, there was no like traction, as I said. So there was really no proof points except for the team. And Mike, the other partner at Lightspeed at the time, he knew Chris, one of the co-founders, from a prior business. Chris had built a consumer business actually before for kids. And so he knew he was really excellent at building products and scaling products with sort of a viral effect to it, which is really important for this business. And then Chris had found his co-founder, who was like, he's a brilliant designer. Not a very obvious also CV trajectory, not like some of the very big logos on his CV, more like a freelance designer who had worked at really exciting projects. And he was like, this is the guy I want to build with. He really understands how to build beautiful products. And so we're like, okay, let's go. We gave them a pre-seed chat, but again, flagged all the risks internally on an IC memo, said like, not like for us obvious team because we've met the guys and we fell in love with them, but just purely like not ticking maybe all the boxes, haven't built in this space before, more from a consumer perspective, going into B2B now. And very busy space, not clear how to communicate competitive advantage, like lots of orange flags in a way, if you wish. And turned out amazing so far, right? The company is on an amazing trajectory. And even today, if I look back at it, it's really hard to put into words what makes this product so special. And I think it just comes down to a lot of small decisions they made on like how the product interacts with you, how it's designed, how it works, how easy it is. Like for me, it lives in the background. I don't think about Granola. It's just there. And that also, by the way, is something that usually investors criticize a little bit. Like you want to get mind share of a person. But in their case, it's really working out. And it kind of fits so seamlessly into your day-to-day and really takes off work off your shoulders. And so, yeah, it's one of those cases where it's really, really hard to structure this into like something logical or that's something that you can analyze. It's really just about betting on the right team with an obsession they had, something they really, really wanted to solve and were annoyed by, and then just craft at building products and beautiful designs and listening to your customers.
I mean, that's one of the hardest things though, is to create those products that are seamless and, as you said, just work in the background. As much as that's the aim for a lot of businesses, it doesn't necessarily happen like that. So to be able to do that is incredible.
It's really hard. And again, like a lot of VCs would even say it's actually not a good sign if a product lives in the background, right? You want to be like Slack doesn't live in the background. You spend a lot of time every day in there. But in the case of note taking, you actually want it to be so easy for you that you don't have to think about it, because that's the pain about note taking.
Yeah.
It's something that I have to do, even though I don't want to do it, but I need it.
Yeah.
I need to have those notes.
Yeah, I agree.
And
I
so,
agree.
yeah, it's beautiful.
And if we look at sort of the future outlook, everything that's going on in tech and innovation and ecosystem and all the different industries, you know, what's next for you? Do you see yourself staying on the operator side, investing, pulling you back, maybe building your own startup? What's next? What does the future look like?
For now, I'm super happy where I am. Honestly, I'm enjoying it so much, and I've been like 7 months now at Lee, and I feel like I have barely touched the surface of what I can do there and what I can learn as well. And the business has so much exciting trajectory, so I'm super happy on that. Definitely wanna for now stay there. However, also like started to dip my toe a little bit into advising a few founders on the side, all just on my own time and no strings attached at all, just because I enjoy it. And I always enjoyed that a lot about my job as VC.
Yeah.
Spending time with a lot of founders, thinking through their businesses, the curiosity is still in me, right? So it's kind of almost like what I said earlier. What I loved about the job is not so much hunting the super big logos or the super big like celebrity rounds, almost, as if you want to say that, but more like finding like spending time with the founders themselves and really thinking through stuff with them. And so I still do that today as well on the side a little bit. Also write a few angel checks, but definitely want to stay for now on the operator side and do the both a little bit.
And where do you sit then on the future of AI? Is it a bubble? Is it not a bubble? Where are we going to be in 12 months? What does it look like in fintech?
Yeah, I really don't think it's going to go away. I think this is like such a transformation moment. You can talk about a bubble as much, and there's companies out there that raise crazy amounts of money, but I think everyone is realizing that the opportunity is so big, and there's been a true monumental shift in the ecosystem that I think that's what's driving it. Less so during COVID, we had a bit of a bubble as well that kind of felt a little bit more unexplainable. Here it's really a technology shift that is driving it, and I think that concentration of capital makes a lot of sense, both in terms of the talent that is being attracted, but also just the reinforcing nature of AI. Logically, it has to concentrate, and it has to mean that a lot of capital is flowing into one or few companies. So I think that will continue. I think for fintech, it's actually also an exciting time. I think there's a lot of opportunity either to, run your business completely differently from the inside out, but also as it touches consumers, decision making. There's a lot of really interesting data that you can work with. So I think we'll see more of that, and I'm excited to see what at Lean, we have a lot of ideas and a lot of things going on our side, but also what new founders in the space will do.
Yeah,
it's exciting.
And lastly, I just want to touch on some challenges before we move to the quick fire round and finish up. But obviously, key ones, even for me to observe, is obviously building your network from scratch in a new ecosystem, and being 10 years in one ecosystem must be hard. The obvious ones around MENA is more complex regulatory landscape as well. Fintech infrastructure is different, right? And then lastly, going from a single player to a multiplayer.
So I think the first one that you said around infrastructure, I hadn't really mentioned that earlier, but it's so true. I think that's been a huge learning curve for me. I'm joining a company that is fundamentally building in a very regulated space. There's a lot of things that I hadn't understood about that. What that means really day to day for a business in terms of operating, things that we need to be aware of that other businesses don't have to. So that's been a big learning journey, and still is. Also, I would say the regulatory ecosystem is on one hand super supportive in the GCC. Like again, I spoke about sandboxes that companies can experiment in a little bit and so on, but it's also more complex because you have two very different markets between Saudi and here, and then in the UAE yourself, you have offshore, onshore, ADGM, Abu Dhabi versus Dubai. Like, there's a lot of nuance there that it took me a few months to unravel and understand how all of it interacts and works. And I think if you if I imagine myself would have come in as a founder or CEO starting here from scratch, that would have been hard coming from outside. So I'm very thankful for that learning journey in Lean, actually, and it's still a bit of a challenge to figure that out sometimes. And I think the network piece is a big one, actually. Yeah, like I hadn't realized how much of a point that was actually for me. 10 years is a long time. And people know you, people know what you invest in, they know what your strengths are, they know what deals to send to you. Obviously, I still had to work hard for my pipeline, but generally it would come to me a lot. Like angels would send me deals, seed investors would send me deals. I just have every other investor on WhatsApp in Europe. Even in the US sometimes it's a true asset that I built over time and that I don't have here yet. And now I do know a few founders here, I know a few VCs here, obviously. But yeah, they don't know me yet. They don't instinctively think about me when they think about angel investors. They don't really have me always on their radar. So it takes time to build that network that flows by itself almost, where people constantly think about you. And I'm working really hard to build that. Because it's important for my role in corp dev, but also, again, I love spending time with founders. And so, for me, it's really a pleasure to work with them closely as an advisory role or as an angel investor. But yeah, definitely door opening was already way easier in Europe than it is here for me.
Yeah, I can imagine.
I need to work a bit harder.
I've been through that cycle. And yeah, that trust layer, like in any ecosystem, is super important. But I think even more in MENA, people, the investors or the founders and just everyone, there's a lot of people that come and go.
Yeah.
They're not here maybe for the long term, and people can see through that. And what else are you bringing as well to the table?
I think also if you work as a VC and especially at Lightspeed or one of the top firms, that by itself opens a lot of doors.
Yeah.
In the end, you invest money. People want to talk to you because you invest money. let's not like sugarcoat that, right? It is the fact. And money opens doors and reach opens doors. And now I just need to work harder for myself to open that door first and then explain how I can do this by myself, basically, and be that network for someone.
Yeah.
But yeah, it doesn't come only anymore with my title as partner at a fund.
Yeah, no, of course, of course. So look, lastly, quick fire round. First thing that comes to mind as well in any of these questions. There's no right or wrong. One trait that separates great founders from average ones.
I think it's actually being relentless, almost.
Relentless. Biggest mistake founders make when raising capital? We kind of touched on that a little bit earlier.
Yeah.
Too many on the cap table.
I think that's not really like a fundraising mistake. No, I think it's what we just said, like, not knowing how to tell your story.
Yeah, storytelling. One thing VCs say they value, but actually don't.
What do we value but actually don't?
A deck?
Nah, decks are actually important, I would say. I think, I think it's that traction piece, actually, which is really contradictory because obviously if you grow really, really fast, that makes a huge difference. Like you can, also to what I just said, I know this is a fire round, but I just said like storytelling matters more than everything. But actually, if your business grows like 10x in a year, that will also overcome some storytelling points in the end. But I would say, generally speaking, I think we care more about the broad opportunity size than purely about the actual revenue traction in the early stages. That is.
Operator or investor? What is actually harder?
Operator.
If you were starting again in MENA, what would you build?
It's a good question, actually. I think I would want to build something that really is like unique to the ecosystem and solves a unique issue here. Mm-hmm. Again, I really feel quite inspired by Manzil in Saudi. It's a 20-year-old founder. He went out to solve the issue of worker accommodation, healthcare, insurance. That's truly something unique to the region that he understood. And I think that's exciting. So don't have the answer for you yet. Otherwise, I would maybe have started it. but like,
I get it.
I think it's something that like I'm getting way more excited than, as I said, copy pasting something over from Europe into the region. Really understanding the market super deeply.
Yeah. One trend people are overhyping right now.
What are people overhyping? I would not say AI because I don't think it's an overhype, actually, to be honest with you. I don't think so. I think you're right to overhype it, and I think you need to overhype it. Actually, I think it's the whole, like, people get so excited about sacrificing their work-life balance.
Yeah.
It's a real trend, especially like in the Valley in Europe. People are talking about working 6 days a week, not taking any breaks, waking up in the middle of the night because they don't want to miss the AI train. I think, yes, it's time to work hard, it's time to build hard, but I don't think it's sustainable in the long run. And people will burn out really, really quickly. So I don't subscribe. I do think it's important also as a founder and a CEO to take moments of rest.
Yeah. No, I love that.
Personally.
Lastly, best piece of advice you've ever received?
Ooh, best piece of advice. Actually, to take that plunge, to take that step and to take that risk.
Yeah.
I think I tend to overthink a little bit. And so both my husband as well as the mentor that I mentioned and so on, they really like push me to trust the process. I think that's a better way of putting it.
Yeah.
You have a thought process, you have an idea, you have an instinct, and just trusting that instinct. And even if you don't know all the answers yet, No,
I love that. Julie, thank you for joining Breaking Down Barriers.
Thank you.
And I've got one more thing to add for our audience. So I've got something interesting for you and a quick ask right now. 72% of the people who listen to this podcast every week are not subscribed. That's totally cool. But here's the thing. Subscribing helps unlock bigger guests, deeper insights, and the kind of episodes that genuinely make a difference to the ecosystem. So if you're taking value from the show right now, even once, could you hit that button? It's free, it takes 1 second, and it generally helps shape the future of this podcast. And who knows, you might tap into the reason why we get the CTO of Amazon next month.